Today, I want to share with you a quick story about a recent sale that I was involved in, where I'm representing the seller. And when we ordered the resale certificate on this transaction, once we got a buyer, the resale certificate, of course, has all the detailed information about the HOA and the financial health of the HOA. And one of the things that came up was that there was a high percentage of unit owners within this smaller complex that were at least 30 or 60 days late in their HOA dues. And so the buyer in this particular case was concerned about the amount of delinquencies within the complex. And so I reached out to one of our lender partners and had them run it past their underwriting desk to get a sense of this and get what a lender's take would be on this in regards to being able to do a standard conventional loan within the complex. So I'm going to share in this email really quick, just so you have a visual. You can see what this looks like. So the answer we got back from this is Capstone Home Loans, and Dan Hunter was the one who responded back to me in this particular question. And his response was a total 30-day lates and total 60-day lates cannot exceed 15% of the total units within the complex. So it looks like in this particular case, with this one, only 25 delinquent looks like we're in the clear. And in this particular scenario, the complex has about 200 units in it. And so with a 200, just using 200 as an easy round number, 15% of 200 is 30. So if this trend continues within this complex, here, let's just say 5 more units or 6 more units go into default or get behind on their HOA dues, the lending within this complex is going to change pretty dramatically, and meaning that it's going to be much tougher for a buyer to get a loan within the complex than just a typical conventional loan. They'd have to convert to what we call a portfolio loan, which typically requires a lot more money down, and interest rates often are not quite as competitive as a standard 30-year fix. So I just thought it was kind of an interesting piece of the puzzle. If you're a condo owner and your HOA is in flux and you run into a situation like this where your delinquencies within the complex are on the rise, it could have a real effect on your ability to sell your property and ultimately what you can get for your property, because obviously if people have to get really creative or unique financing, or if they have to put a lot more money down in order to buy your unit versus another that's in another complex down the street, that's going to have negative pressure on what you can get for your property at the end of the day. So interesting scenario that came up that I thought I would share. If you have any further questions about selling your property or real estate in general, my cell phone is 206-949-3793. We'll talk to you soon.